All right, let's dive into something pretty fascinating. Picture this. You've got a killer piece of business software, and you are ready to take it international. First up, the Swedish-speaking market. Seems simple enough, doesn't it?
I mean, you'd think, okay, just hire a translator, swap out the English for Swedish, and boom, we're done. It's just one language after all. How complicated could it possibly be? Well, turns out that very simple assumption is exactly where things start to get tricky. Because right off the bat, you're faced with a critical question. Which Swedish are we talking about? And believe me, that question opens up a whole rabbit hole that goes way, way beyond just vocabulary. So first, let's just get our geography straight. Where exactly is Swedish an official language? Because the answer isn't quite as simple as just, Sweden. Okay, so obviously we have Sweden. No surprise there, it's the sole official language. But it's also one of the 2 official languages over in Finland. And get this, it's the only official language in the Åland Islands, which is actually an autonomous part of Finland. So now we're dealing with 3 distinct regions, each with its own separate legal and financial system. And that, my friends, is where our real story begins.
See, this isn't about different accents or a few local slang words. This is about 2 completely different ways of thinking about money and business, and those differences are literally baked into the accounting laws of Sweden and Finland.
At its heart, it really just comes down to their core mindset. Sweden's K3 standard, it's all about impressing investors. It's built on international rules, and the whole point is to show off a company's future potential and make it look attractive. On the other hand, you have Finland's FAS standard. It is way more old school. Its job is to protect creditors, so it values caution and stability above all else. It's really a classic showdown. Optimism versus prudence written right into the legal code.
And this really nails it. It's not a tiny difference in interpretation, it's a fundamentally different philosophy from the ground up. One is looking outward, toward the future, toward global markets. The other is looking inward, focusing on stability and managing risk right now. So, okay, that's the high-level philosophy. But how does this actually affect a company's books in the real world? Well, let's look at a couple of examples that can make a company look dramatically different depending on where it is.
So imagine a tech startup that's pouring money into research and development. In Sweden, the rules say you can capitalize that spending. It's a fancy accounting term, but it basically means you can list all that R&D money as an asset on your balance sheet. Instantly, your company looks bigger and more valuable. But in Finland, nope, that exact same spending is usually treated as a straight-up expense for the year, which means your profits look lower.
And it's the exact same story with something called goodwill. That's the extra money you pay for a company above its book value when you acquire it. In Sweden, you can spread that cost out over a really long time, maybe 10 or even 20 years. But in Finland, you have to write it down much, much faster, usually in just 5 years. The result is that the Finnish company's earnings will look lower and more conservative right after an acquisition.
So let's just pause on this for a second, because this is the whole point. We are talking about the exact same company, same people, same product, same sales. But simply by following the local accounting rules, its financial reports will tell 2 completely different stories about how valuable it is.
All right. So the numbers are different, the rules are different, I get it. But come on, the words have to be the same. The language of business, it's all Swedish, right?
You would absolutely think so. But this is where a simple translation project can truly go off the rails and make your software totally unusable for the people you're trying to sell it to. Just take a look at these. These are fundamental everyday accounting terms. The sales ledger, the purchases ledger, even what you call the fiscal year. They're all different words. If you use the Swedish term kundraskantra in your software for a Finnish user, it wouldn't just sound a little weird. It would be confusing and technically incorrect to an accountant there. And here is the absolute deal breaker. Tax. In Sweden, it's called moms. In Finland, while people might say moms in casual conversation, the official, legal, this has to be right in my software term is mervärdesskatt. Getting a word like this wrong isn't a typo. It's a massive compliance and usability disaster. And if you thought it was just the word, think again. The actual numbers are different too. The standard VAT rate in Sweden is 25%. In Finland, it's 25.5%. So even if you somehow got the word right, if your software is hard-coded with the wrong tax rate, you've just created an absolute nightmare for every single one of your customers. So what did we actually learn here? It's that our original, simple idea, just translate it, was completely and totally wrong from the very start. What we actually need is something much, much deeper.
And that brings us to the real hero of our story, localization. It's this idea that you don't just swap out words. You have to adapt the entire experience, the legal stuff, the financial rules, the cultural norms, everything, so that your product feels like it was truly made for that specific market.
I mean, just think about the journey we just took. We started with what we thought was one language, Swedish, but we ended up finding two totally different financial philosophies, two sets of accounting rules, two different currencies, the Swedish krona versus the euro, two different tax rates, and even a completely different vocabulary for Business 101.
At the end of the day, it really comes down to this. Great localization is an act of respect. It's about respecting the unique laws, the financial culture, and the professional language of a place. It's about going beyond the surface to truly understand the context.
And that's really the question I want to leave you with. In our own work, in our own plans, what seemingly simple things are we taking for granted? What hidden complexities, just like this tale of two Swedens, might we be overlooking right now?